else. So again, if you missed that beginning intro, welcome to Michigan Real Estate Live. It's August 4th, 2026. And at the end of the day, we're talking about real estate. We're going to be covering the Ben Mallah interview, and we're going to be covering everything that's really been happening in the markets recently. We're going to be covering a lot of what's going on, and not just the real estate markets, but again, we're going to be covering that interview on the Iced Coffee Hour with Graham Stephan on his podcast, and really what everybody's doing with the Michigan real estate markets. So again, I'm excited, and it should be very interesting. And so again, when we're looking at some of these breaking news stories and what's kind of new and trending, we have to focus on what's happening in the state of Michigan when it comes to policy. So when I look at this, Governor Whitmer signs a bill to build, baby, build more homes across Michigan and deliver on promises in state of the state address. So again, she made this clear on July 21st, 2026, Grand Rapids, Michigan. Today, Governor Whitmer highlighted the balanced bipartisan FY27 budget's investment in housing and signed transformational bipartisan bills to build and refurbish more homes across the state. These actions build on the governor's record-breaking investments in affordable housing, lower costs for Michigan, and delivers on the governor's promises made in her 2026 State of the State Address to expand housing opportunity across Michigan. These bills create Michigan Housing Opportunity Tax Credit to work in tandem with the federal low-income housing tax credit to build more affordable housing, cut red tape to help build new homes, and prohibit institutional investors, such as hedge funds, from owning more than 100 single-family homes in Michigan and pricing out working families. The governor's eighth and final balanced bipartisan budget also invests $50 million into Michigan's Housing and Community Development Fund. $50 million isn't really that much in real estate, in my opinion. Every Michigander deserves an affordable, quality place to call home, said Governor Whitmer. I'm proud to sign these bills that cut the red tape, lower the housing costs, and expand our housing stock available to working families looking to put down roots. Over the last 7.5 years, we've built more homes than any administration in state history and lowered costs for every Michigander, making it possible for more people to become homeowners. This year's budget builds on progress by investing in our neighborhoods and the people who need it most. Let's keep on working together to give every Michigander a shot at finding a place to call home. Grand Rapids is growing, but we aren't immune to the problems facing all Michiganders. Housing supply hasn't kept up with the demand, said Grand Rapids Mayor David LeGrand. It is critical that we build more housing at every price point so that young families, seniors, workers, and longtime residents can continue to call our city home. The legislative package gives communities like ours more tools to address the housing shortage, reduce unnecessary barriers to building, and creating the affordable housing opportunities that our residents urgently need. So again, that's a lot of Section 8 housing, but you also have new construction in there as well. So again, a lot of people are looking for homes. A lot of people are looking for that. They're hardworking people, and they have families, and they want to get into a home so they can actually live here. And so, according to this article, Gretchen Whitmer is doing that. Grand Rapids is growing, but we aren't immune to the problems facing all Michiganders. So that's pretty much what's going on when it comes to, since July 21st, when this was first released. This was from the pressofmichigan.gov. Governor Whitmer signed the bill to build, baby, build more homes across Michigan and deliver on promises in state address. So we'll see if that actually happens. Words are words when it comes to politics, but it's definitely important to take note of the things that they are doing. State lawmakers hold the key to lower housing costs and fuel construction, expert says. Most new housing construction in Metro Detroit replaces natural working land rather than filling in spaces and established communities with a variety of housing types. Michigan's housing shortage isn't an economic inevitability, it's a policy choice. That is the argument of Nolan Gray, a leading voice in the national housing reform movement brought to Michigan last week as state lawmakers consider sweeping zoning changes to help lower costs that have drawn fierce resistance from some local governments. So what does this mean? This essentially means that more houses are being built. And despite the tough market that we're in with real estate, it's rather important, again, like I'm always saying, don't think about what the prices of real estate are and the prices of real estate going up. Think about what your qualifications are. What is your financial situation? Do you have a stable income, stable employment? Do you have those 2 years of employment history? Do you have a good credit score? How's your debt to income ratio? How much debt are you in right now? And then at the same time, also you have to consider really how much money do you have in the bank to put down on that down payment, right? And you have to think, do you know what you're even investing in? You can get a 30-year fixed-term mortgage, right? With basically a conventional mortgage. And then you can get an FHA loan. Basically, this is for your investors. If you want to get 3.5% down, you can get that if you have an 850 credit score, or really just a good credit score and a good credit history. You can get a pretty good term on a loan for an FHA at 3.5% down, and then get yourself into a multifamily investment situation where you're making rental income. And so that's very important. And then if you are a former veteran, of course, you have the VA, and you can use that loan to basically get you into a home. So you have to think about all these. Have you served in the military? Are you an investor? And do you have a good credit score? Can you use that FHA 3.5% down? Or do you just have do you have that employment history and that consistent income that basically allows you to have that 30-year fixed rate mortgage? And so that's kind of the questions you should be asking. Okay, and so again, before we get into our Ben Mallah interview with the Iced Coffee Hour, I wanted to cover these little articles and just kind of talk about what's, again, happening in the real estate markets today in Michigan before we get into all of that. So again, the Michigan housing market's price is still the same as it was yesterday. $269,972 is the average Michigan home value, up 4.2% over the past year. We covered this a little bit yesterday. And so today I wanted to cover some of the real estate before we get into the Ben Mallah interview with the Iced Coffee Hour. I wanted to cover some of the real estate that you'll find in Macomb County. Yesterday I covered a little bit of the entire state and what was available. Now today I want to cover a little bit what's actually in Macomb County. So if you're living in Macomb County, if you live, again, that means if you live in Armada, if you live in Metro Detroit, you live in Warren, you live in any of these places, you live in Shelby Township, Washington Township, all these places offer you some pretty good real estate deals. A lot of suburban life in Macomb County. So people are looking to live in Macomb big time. And again, where I come from, Romeo, Michigan, or Royal Oak, Michigan, where Best Life & Co. really focuses a lot of our work, then we can help you absolutely with this situation. So again, we're looking at Macomb County real estate. This property here is $525,000 at 57492 Hawthorne Drive in Washington, Michigan. But again, as you can see, newly painted walls, you're typically going to see this. You're going to have some ceiling lights sometimes. You're going to have those marble countertops. You're going to have nice new painting on the walls, nice windows, open space. That's kind of what everybody's looking for today, right? So again, this price is for $649,000, and this is 53134 Alyssa Court, Shelby Township, Michigan. So again, Shelby Township's been a big place for people looking to settle down, buy their final home. So again, beautiful home here. And so when you look at all of it, especially the 3D home, we dig into this as we wait for this to load, you get to see kind of what this house actually looks like. So again, this is pretty cool about Zillow. This is what I like about it. The total internal size is 3,325 square feet. You got your staircase going up to the second floor right when you walk in the door. You have your kitchen, you have your dining room here, kitchen right next to it. And as you walk into the kitchen, you end up getting that open living space. You got those marble countertops, painted cabinets, and you got a nice view of the backyard with the windows. So again, when we keep walking through, go back to that family room. This would be your actual laundry room right next to that entryway or the exit to the home. Got a nice stove in there too. So again, when we look at this, it's kind of a unique house, unique build. And then of course, you got your entrance here, your family room or your living room right here. Nice flat screen, beautiful attached entertainment center with a fireplace. So that's very nice, cozy. And then of course, you got that nice and tall ceiling. So again, if you're looking to invest in something like this, be sure to contact me, and we will get you hooked up and help you find what you're looking for when it comes to your dream home. That's kind of what I help you do. I'm your realtor, Brendan Ecker, or you can visit BrendanEckerRealty.com or DM me, just leave a comment, a home, and I will be able to get in contact with you. Again, another home for $649,900 right here. So again, this is just more of that suburban living. This is at 42316 Locknan Drive in Sterling Heights. But again, very modernized, marble countertops. You have that nice open living space, and that's kind of what a lot of people are looking for. Nice walk-in shower, and then beautiful marble stone countertop in the bathroom there. And so again, lots to look at there. So again, these are just kind of the properties I've been looking at. These are just kind of the top properties that are listed on Zillow. This property is $875,000 at 22461 Benjamin Street in St. Clair Shores. So again, if you're looking for that St. Clair Shores life, you're looking for that kind of luxury coastline vibe, you want to live right on the water a little bit, then you get to live right there. And so a nice property, nice little house where you get to have access to the city and some nightlife. You got nice walk-in open, what am I thinking of? The dresser here. Nice in-ground pool. So lots you can do with that. So this is why people are interested in this property. And again, lots of other options too. This property is running for $1.125 million. I thought this was pretty dope. 41215 Belvedere Street in Harrison Township, Michigan. So again, this is more of your brutalistic, your modern kind of architecture. Gives you that LA vibe a little bit. Some of the houses that you'll see there. So again, this is Harrison Township, kind of right on the water. So if you got a boat, you could dock it right here. And then when you go on the inside of this home, though, very cool. You got this nice modernized staircase, beautiful hardwood floors, painted walls, everything new, awesome office, very slick, very state-of-the-art and aesthetic. And again, that's kind of everything with none of the furniture already in there. Walk-in shower, of course, beautiful porcelain toilet, but newer model. And again, marble countertops in the bathroom. Nice walkthrough experience when you go through the home here. So again, this is 1.125 with 4 beds, 4 baths, 3,580 square feet in this property. Again, nice nice dining room here. Very modern feel, very modern vibe. And again, you got your the ceilings are newly painted, so that's also cool. So when you're looking at these properties, you got to think about, what do you want your family to live in? Okay. And with the kitchen, again, very modern kind of thing. You almost have like a little bit of a farmer's sink there, it looks like. So when you look at this, again, nice view, nice panoramic windows. So again, you're going to get more of that LA vibe. Okay, when you go to Los Angeles, you'll see a lot of these same kind of properties, same kind of architecture, same kind of feel when you go into that interior of the home. You'll have the same kind of thing. Beautiful closet for the lady and yourself, I guess. But again, even from the kitchen, that's your view of, again, that little channel right there. You got that water view. You'll see boats driving by. It's beautiful. And so this is what a lot of people are digging. Nice upstairs. Now we're in the upstairs, the second floor. Master bedroom. Again, without the furniture, same bedroom. Again, you can always repaint the walls if you don't like the painting. And then bathroom. Again, beautiful bathroom. Very modern. Again, it looks like you have like a little space to sit down in the bathroom there. So a lot of people are digging this. We've been getting emails about this property, actually, specifically here at Best Life & Co. So a lot of people are liking what they've been seeing here. So again, maybe this is the master bedroom. This looks even bigger. But again, beautiful kind of layout and something you could probably see yourself living in. So this is, again, 1.125 mil. And this is what you're kind of going to be looking at. So if you want to tour this home, be sure to leave a comment in the comment section or DM home. Or you can email me at brendaneckerrealty@protonmail.com. Or you can just go to brendaneckerrealty.com. Again, just come right here to brendaneckerrealty.com and reach out. And we'll talk. You can leave your information, and we'll be able to hook you up with what's kind of going on. Again, got real estate questions, ask here. This is brendaneckerrealty.com, BRENDANECKER realty.com. And leave your message with your real estate related inquiry. We'll respond right away. So again, that's just one way to get in contact with me, or you could just book a private consultation. This will take you to my Calendly link. Boom. And you'll sign up and just hook it up. So again, good way to get into the market and get into the zone. 30-minute meeting. So the Calendly link's also right on the website. So if you want to tour any of these homes, let me know. If you're looking to invest in real estate, let me know, and we will get you into the markets. So that's kind of what I'm looking at here today. A lot of properties like that. A lot of multi-million-dollar properties. Properties are going up in price when it comes to Macomb County. People want that newer kind of vibe. They want that suburban lifestyle. They want that good life. Okay, so this is 19246 Hamlin Lake Drive in Macomb, Michigan. So when we look at this home, This is also a nice, awesome home because it's very modern. You got that nice brick kind of look, nice, strong, two garages here in the parking, in the driveway. And then when we look at the actual home itself on the interior, you have that nice fireplace here. You got the tile floors, raised ceilings, very high ceilings. Everybody loves that. Nice archway around the door here. Newer windows. Everything's kind of very modernistic. And you get that nice shiny tile, that shiny feel. You got that wraparound staircase to the second floor. Nice echo when you walk into the home, right? And then this leads right into that open kitchen, that kind of experience that everybody seems to be asking me about lately. Everybody kind of wants that. And so, again, this is your bathroom. Again, very Los Angeles kind of vibe, I would say. Nice Hollywood Hills kind of vibe. Got that nice mirror, something modernized, a little bit different. That raised kitchen sink. And again, this is the kitchen. So again, this also leads right out to your backyard and that kind of view. You got a nice chandelier here. So this is your open kitchen experience. So pretty cool. So this is what a lot of people are looking at. $889,000 for this. 4 beds, 4 baths, 3,533 square feet. A lot of archway doors in the home. And again, it's just very suburban lifestyle. So if you're looking for that suburban lifestyle, then you will love this. This is kind of what people have been interested in. You got that nice sit-in bathtub right here. Walk-in kitchen or walk-in shower. So that's very cool. Again, lots of cool stuff. When we look at the bedrooms, second floor, you got your second floor bathroom. Very cool. A lot of space if you want to have some kind of guest bedroom or a storage room or any kind of office. This is a great place to do it. In any of these rooms here. Again, this is your third bathroom you get to see. And then when we continue looking, you also have that fourth bathroom right here. So again, you can also put, actually this would be more of your washer and dryer room. Clean your clothes. Have it right there. Beautiful, huge closet space. So put anything you want there. So that's Macomb County, Michigan. And that's kind of what people are looking at. 19246 Hamlin Lake Drive, Macomb, Michigan, if you're looking for that property. And again, contact me. We'll get you an open house. We'll get it set up. So again, consider it. You know, Shelby Township, again, a lot of properties like this all over the place throughout Macomb County. And this is kind of what we're looking at when it comes to these prices. $420,000, $435,000, $365,000, $215,000, $525,000. We looked at this apartment a little bit yesterday. And again, renters. The renter space is going to be rather important for the economy that we're living in with this Iran war and everything going on, right? So it's not so easy to just invest in real estate or to buy a home. So some people are going to need to rent. So with this kind of property, you actually have access to a nice apartment complex and get yourself a nice, or get yourself into a nice apartment. If you're a younger kid, if you're in college, this gives you the opportunity to really, have a place to live, and you'll fit right in. So again, a lot of people are looking for apartments right now, and there's no shame in that. Again, there's nothing wrong with having a place to live, getting away from the parents or whatever the situation is, just having a place for yourself. And so this is actually one of your nicer apartments you could have. Nice little pad to have all your friends come to and to really show off kind of the vibes of what you're doing in life. $410,000 for 297 West St. Clair and Romeo. So again, just another nice little property here. $599,000 for the 7 Oaks Drive, Shelby Township, Michigan. Lots of new homes here. $265,000. This is one of our more discounted prices that we've seen in Macomb County. 1229 Burlington Drive here, Mount Clemens. So this is going to be, again, $265,000 is pretty good for today's market when we look at what the average prices actually seem to be, what people are actually looking at. So again, not bad. Same kind of look, but this is your vibe. You got your little greenhouse. Got a nice little open living space, carpeted stairways. Nice little first home, second home, third home. Nice attic for some storage. A lot of people don't even really have a nice attic, but that's a pretty nice one, nice and organized. Got your little shed here for some extra storage space here, and you can always renovate that garage there, so not bad. So again, we look at some of these properties, and I think, hey, if you're looking to invest in real estate, work with me. I'll help you get into that property. I'll basically walk you through the whole process, and I'll hold your hand. We'll make sure it gets done the right way. And to me, that's kind of my fulfillment in real estate. That's why I did this. I like to see people get a home. I like to see people get started in real estate and do what they got to do. So again, we'll show more properties throughout the week, but this is kind of what we're looking at for the most part in Macomb County. Again, you can feel free to look. So again, this will be the last property we look at, our luxury property of the day, our 68050 Hillside Lane in Washington, Michigan. So again, this is a beautiful castle-like estate. This is more my style. I love luxury real estate. This is what I like to connect with people with. This is really what I like to focus on, kind of my wheelhouse. So again, beautiful, nice fountain right in the center of that living room here. Nice stairways here, beautiful tiles, archway door. And it's very like a Gothic architecture, very modernized mix with it. Gets you that medieval kind of feeling, very castle-like presence. Yes, your voice will be echoing in this living room. When you're watching your flat screen through this little area here, look at how high those ceilings are. Going to be huge. So again, nice pillars. This is a nice, very old European architecture style home. So this is what I'm all about. This would probably be my favorite real estate that I've looked at yet in the past week. And honestly, it's beautiful. You got that nice hallway. Again, I'm all about the pillars. Always about the pillars. Got a nice living space here. And when we look at all of the vibes of this home, again, you have your nice dining room in this area. Beautiful kitchen. Again, lots you can do with this. Lots you can do. Gives you a nice sky kind of feeling to the ceiling there. White cabinets. Everything newly painted. And that's what it's all about. So when we look at, again, a lot of this entire home, it even has an in-ground swimming pool. I mean, you can't get much better than that. Again, this is $9 million, 15 beds, 25 baths, 32,891 square feet. So if you're an investor looking to go big in real estate, then call me up. Okay, we will get you a tour, and we'll make sure we market the property, drone kind of footage. We'll do drone footage, all of that good stuff. We'll make sure that we're getting you the best deal, and we'll make sure that if you're selling this home, then contact me as well. And we'll make sure that we can get you, again, the best possible outcome. So again, who doesn't want an in-ground swimming pool in their home? Nice stone tile around it, so very safe. Give a couple of fake palm trees there to give you that Florida, California vibe, that Las Vegas vibe. And so this is huge. You never have to leave your home when you live in this kind of home, right? Master bedroom, it looks like right here. Beautiful bathroom here. Again, nice hot tub, jacuzzi kind of vibes with that. Walk-in shower. So this is the kind of property that people fight for in the real estate market. Again, this is if you have the separate bedrooms for the wife, or if you have a daughter or something. And got a nice raised ceiling here, some beautiful chandeliers. So nice vibes. Same thing. Got themselves a bathroom there. This would be a nice study if you're a psychiatrist, if you are any kind of researcher, analyst, if you love to, you're a podcaster, or you could just work this as an office, right? You like to do podcasts, and this would be a good backdrop for that. This is always my favorite, is to look at the office space, personally. Look at that hallway. That's just massive. Massive. Just absolute maverick of a home right here. So again, this is your second floor. And this is the bedroom. Just another one of them. And it just goes on and on and on. So this is kind of what we're looking at. And there's a full view. This is like a camera view. If you were to have cameras in the home, this is kind of what it would be able to see. So this is pretty awesome when we look at it. So that is your castle kind of real estate. And it goes on and on and on. So many pictures here. So again, beautiful kind of property. $9 million for this. But again, you never need to pay the whole $9 million. You don't have to pay just in cash. You could always get that FHA loan, right? Turn this into a hotel if you want. You could do this. You could do anything with this kind of property. Make this commercial. Nice glossed stone tiles here for the walkway path. So we know that it has a good foundation on the home. Again, nice space for people to have events, and you want to have any kind of events, you want to have weddings or anything at your home, this is a great place to do it. Because you got plenty of tables already sat out with the audience, nice bar, nice dance floor. Again, more long hallways, so people, nice place to put some paintings and some old stuff for people to look at. And, of course, you have a movie theater. Yes, you have a movie theater, right? So if you're looking at luxury real estate, you got to love when you got your own vault, and your own safe. Pretty cool. And it just goes on. You got more of a kitchen. You got another kitchen in the home. Then this is kind of a closer look at that wraparound driveway wherein you're going to pull into the home. It has 3 garages here, so it'll probably be able to fit like, I don't know, maybe 6 vehicles, 7 vehicles in this one garage. Pretty awesome. And you're also guarded by lots of privacy. So you have your trees. Privacy is a huge deal, right? So you got trees blocking you from your neighbors. You also got a nice little farm field in the back here. And then you got your, got a nice little pond with it. So a nice place to live. And again, you're far away. You're a little bit secluded from everybody else. So not everybody can just see your home or gawk at it from the street. It's going to take them to actually say, hey, Bill, what's your name? Can I come in for dinner? And then they end up like getting to see your home. And so this is probably my favorite property that we've looked at so far. So that's kind of all the properties we'll look at today. We'll look at more tomorrow. And again, this is just from Macomb County that we looked at today. Again, we don't have a lot of time to look at more properties in Macomb, but we're going to look at more and focus on some of these properties throughout the week, and we'll be coming back to that for sure. So again, Michigan Real Estate's new features, market features, a new corporate investor ban, rising home prices, and increased housing inventory. Corporate investor ban, Governor Gretchen Whitmer signed a law barring private equity and large corporations from owning or renting more than 100 single-family homes in Michigan. Median listing price in statewide hover around $300,000, up about 5.4% year over year, while total inventory has grown by over 8%, giving selective buyers more choices. Michigan agricultural real estate values reached $7,000 per acre, with specific cropland averaging $6,600 an acre. So again, we covered that article as well. Some of this is right here. Again, Michigan cropland values rise to $6,600 per acre. So again, Michigan cropland values hit $6,600 per acre in 2026, up 3.9% from the previous year, while real estate values hit $7,000 per acre, up nearly 3%, and farmland and buildings value hit $64 million, up 7.8%. So again, farmland and buildings value. So that's something you need to pay attention to. According to the USDA's Land Values 2026 report, and again, you always have that USDA loan too, by the way, if you're looking to get into real estate, released July 31st, U.S. cropland land values remains resilient, reporting the national average hit $6,000 per acre for the very first time. Meanwhile, the U.S. farm real estate value, a measurement of the value of all land and buildings on farm, averaged $4,500 per acre for 2026, up $150 per acre from 2025. And the U.S. pasture value averaged $2,000 per acre, an increase of $80 per acre from 2025. Last year, cropland values rose 4.7%, while pastures rose 4.9%. So very big, very important. This is kind of where we're at when we look at the entire market. And then the U.S. real estate market in its entirety, Outlook Mid-Year Review 2026. Again, while our original 2026 forecast for moderating GDP growth and greater commercial real estate investment activity has generally proven correct, we did not expect the geopolitical shock that would reshape the macroeconomy by mid-year. 10-year Treasury yield, which has expected to fall below 4% by year end, will now likely remain above 4%. Despite this, the U.S. economy has demonstrated considerable resilience, supported by an AI investment boom, GDP growth, and tracking at 2.1% for year over year, and on par in 2025. Again, this backdrop, commercial real estate has proven to be resilient. Investment activity remains on track for a 16% year-over-year increase to approximately $605 billion, in line with our January forecast. Cap rates, which we originally expected to compress modestly, are now projected to hold largely stable for the remainder of the year. Although incremental compression is expected in 2027, persistently higher benchmark rates mean that income will be the primary driver of total returns. So again, office fundamentals continue to normalize. Industrial leasing activity is a forecast to reach at a record annual total of approximately 1 billion square foot. And again, the near-term outlook is not without risk. Energy markets will take time to normalize as hostilities in the Middle East remain a threat. Inflation will remain well above target, so the Fed's next move is uncertain. However, the underlying structural drivers of real estate demand reshoring, AI infrastructure build-out, demographic-driven healthcare needs, and barriers to home ownership, among others, remain firmly in place. Investors that stay focused on asset quality, income durability, long-weighted average lease expiry, credit strategies, and market selection will find compelling opportunities amid uncertainty. So again, the important sentence here, in my opinion, is right here. Again, AI infrastructure build-out, demographic-driven healthcare needs, and barriers to home ownership, among others, remain firmly in place. Investors that stay focused on asset quality, income durability, and long-weighted average lease expiry, credit strategies, and market selection will find compelling opportunities amid the uncertainty. So, again, that's kind of where we're at with the Michigan real estate market for the entire U.S. real estate market in its entirety. So, again, Gen Z homebuyers focused more on cost than location. Aspiring Gen Z homeowners would rather change zip codes than increase their budgets, and finding the right home trumps buying one quickly, a new survey finds. Nearly two-thirds of Gen Zers in New Home Source surveys said that they'd relocate to a new city or state to afford a home, while only 19% would raise their housing budget. Most respondents said they wouldn't add more than $300 to their monthly housing payment, and they'd prefer to spend no more than $150 extra each month. Top motivations to move included lifestyle factors, a new job, or being close to family. They preferred that the home features cited by Gen Zers were a large backyard, garage, and pool. The dream of home ownership is still alive for young Americans, but they don't want to bust their budgets to make it happen, a new survey found. Understanding that the next generation of home buyers published today by New Home Source suggests that aspiring Gen Z buyers are willing to make sacrifices to afford a home, but spending significantly more on housing costs isn't one of them. So again, this is kind of what we're looking at. Yeah, Gen Z is pretty much seeing the housing markets, and it's like crazy, right? The prices are crazy in real estate today. And they're saying, hey, I would relocate to any other state if it means that I can actually afford a home. Well, guess what? Michigan's one of those states where Gen Z can actually live, and you can do that. So if you come from out of state, you can work with me as your realtor, and we hook you up with an actual property that makes sense for you and your family. And again, it's actually affordable to live here. And at the same time, we also have, again, a situation where we have new construction being built, and a lot of that happening under Whitmer, despite, opinions that people might have on her. On top of that, we have U.S. commercial real estate market prices dumped 30% over the last 4.5 years, but the last two times that happened, prices soared 107% and 79% over the next decade, respectively. USA Commercial Property Price Index kind of shows this chart right here when we look at that. So again, 79% plus over the last 12 years, and then dropped 30% over 4.5 years. Weird. Very interesting. So again, these were some of the comments. When we look at that, interest rates at 20-year high, inflation higher than target, national debt at $40 trillion, deficits at $2 trillion, GDP slowing 1.5%, consumer sentiment historic low, unaffordability historic high, etc. Yep, we are definitely looking at a new boom. Yeah. So a lot of people are feeling that way right now. So again, this is why you got to get your money up, and you got to find entrepreneurial ways to make money. So again, breaking. This comes from China. Chinese real estate markets have fallen to its lowest prices in at least the last 20 years. So if you think U.S. real estate market's bad, you also have China to be thinking about too. They're not doing so hot. The U.S. housing market is in for a wild ride as rates rise to new highs. The average interest rates on a 30-year mortgage is nearing 7%. In other words, if you bought a home in 2021 at 3% interest, moving to a new home today would increase your rate by 400 basis points. Assuming you buy a $500,000 home with a 20% down, monthly payment at 3% interest would be $1,686 a month, and then your monthly payment at 7% interest would be $2,661 per month rent. That's kind of crazy, right? That's an increase of almost $1,000 a month, or 58%. That's already stagnant housing market is set to freeze. So again, there's that chart showing that the bond market situation is crazy while everyone focuses on AI. U.S. borrowing rates just hit the highest level since 2007. So are we in another 2008 housing market crash? No. I think it's a little bit different, but we are getting to a point where things are getting sporty and spicy. What's the worst real estate investment idea other than buying a home just to rent it out as an Airbnb? Again, so when we look at some of these real estate headlines on YouTube, again, we also have Grant Cardone, who's been sued for, again, Class A units, $350 billion Bitcoin, or 350 Bitcoin. We bought the real estate below cost to build and the Bitcoin below cost to mine. So again, what do you think about Grant Cardone's lawsuit and everything he's going through? I think that's not so fair. But really, that's what's happening on Twitter, and that's the conversation on Twitter today for real estate. Again, if you want to go on, if you're looking to invest in commercial real estate, I also recommend you get into Michigan Commercial Real Estate on Facebook, get into this group. And again, that's where you'll find me a lot. I'm in there, and you can contact me. And again, there's a lot of other groups on Facebook that you should join as well if you want to get in on the real estate game. So after our little market update, now I wanted to respond to just a few parts of this entire 2-hour interview. Don't buy a home. Ben Mallah's final warning for the 2026 real estate market. He's been a successful investor his entire career in Florida, pretty much for the most part. And so we'll cover some of this podcast and what he had to say, and we'll react to some of it.
Not everybody's cut out to be rich. That's a fact. You got to have that burning desire inside of you.
We paid $43 million for this place.
I'm not just talking out of my head like a lot of people. I'm out there doing it. Class is back in session. If you're in real estate, the most important person in your life is your banker.
Why is banking the most important thing if you're trying to build wealth then?
You got enough money to buy a piece of real estate? No, average person don't. Your bank comes before your wife. What? Give the more they want. Don't ever buy a house for cash flow. It's stupid. We've identified this property. We're thinking about buying it.
Why'd you buy a Tesla dealership?
Would you trust Elon Musk to pay your rent? But you know what $100,000 a month to him is? It's like you go in the store and buying a soda.
Do you think it's easier than ever right now to get rich?
Well, don't worry. The world needs dishwashers. It's true.
Ben Mallah, you have to spend $70 million in the next few months. How difficult is it to spend $70 million?
It depends whether you want to buy smart or you want to buy I mean, it depends. I'm out looking for deals every day. We just closed on a Tesla dealership. We just closed on a private university. We're going to contract. The credit is this.
Deploy your Node.js app with Hostinger. Ship straight from GitHub or your development.
Again, when it comes to real estate, I like Ben Mallah because, again, this guy's really been in the market a pretty long time, and he really knows what he's doing here. So, again, let's look at some of what he had to say here. So, kind of skipped ahead a little bit.
Ben Mallah, you have to spend $70 million in the next few months. How difficult is it to spend $70 million?
It depends whether you want to buy smart or you want to buy I mean, it depends. I'm out looking for deals every day. We just closed on a Tesla dealership. We just closed on a private university. We're going to contract on a brand new gym. My son's working on an apartment building, that's a major rehab. My other son's working on another rehab. I mean, you gotta look. You gotta find deals that make sense.
So explain why you're in.
So again, everything Ben Mallah is about is finding deals that match your financial situation too. That's why Ben Mallah has been pretty much one of the most successful real estate investors in the United States, one of them. And again, been close to Trump. Whether you like Trump or not, Trump's a real estate guy. And him and Ben Mallah have been very close. So again, this is a great real estate investor. And everything he has to say here is rather important. So you definitely want to pay attention.
This position, what did you sell to have the $70 million you now need to spend?
I mean, yeah, we sold quite a bit of real estate. Maybe I shouldn't have. Maybe I shouldn't have sold.
What makes you say that?
I thought that the market was going to turn and the banks are keeping it from turning. That's what's going on.
What are they doing?
I mean, listen, I'm out there on the street. I'm dealing with brokers. I'm at properties. I know. I really know. I'm not just talking out of my like a lot of people. I'm out there doing it. And all the big shots and all the people that thought they were so brilliant that overpaid during COVID in 20, 21, 22, 23, they're getting screwed out because they didn't know what they were doing. Okay. Typically, these type of properties don't have long-term financing on them. Mm-hmm. So they all locked in at their little 3% rate. They locked it in for 5 years. And now the rate's doubled. They got to refinance. They got to pay the bank back.
It's important to remember when Ben Mallah talks about 5 years, like locked in for 5 years, 3%, that's a FHA. So that's basically FHA. Those are highly experienced, seasoned investors. So very much commercial real estate is Ben Mallah's game. So he buys hotels, he buys businesses. Something important to know about Ben Mallah.
You're not going to cash flow. What does that mean? That means that the loans that the bank made are no longer at the same value they were when they made the loan. Why? Because the property can't cash flow a double interest rate. It's simple. And listen, I deal with sellers every day that are just ready to throw the keys and walk away from millions of dollars in equity investment that they had. And a lot of them pool people together, okay, with your syndicates and raising money and all that. So, a lot of people are going to lose their shirt. But the banks loan too much money. Not only the buyer, the own people that bought property are going to lose, the banks have to lose. Why? Because the property ain't worth it. And a lot of these places, these people shouldn't have bought real estate to begin with. Because when I go out there, because they were bleeding, they're not operating properly. So therefore, the property deteriorates. It's not being managed properly because they don't have the experience, or they hired a management company, and the management company don't care. They have no skin in the game. So there's a lot of distress out there right now. I've looked at thousands of apartments and multifamily, and there's a ton of distress out there.
So what are the banks doing right now to prevent the collapse from happening then?
They're on the fence. They need to get off the fence and realize this loan is not worth what we loaned on it. But they don't want to do that. They don't want to admit it. They don't want to realize it. They've all been praying and delaying. Praying rates are going to come down. Okay, keep delaying. But now it's at the point where the sellers or the owners have let the properties go because they don't really know what they're doing.
So they're just letting it go to the
interest
bank.
rates have now, what happens is when your time runs out on a loan, you have a fixed rate for so many years. All right, well, when the fixed rate period is up, it goes to today's rate. They can't handle that. Okay, so the banks are just trying to work with them. But there's nothing to work with.
Couldn't they just delay a little bit?
Delay. They've been delaying. They've been delaying for years
But
now.
it sounds like they're still delaying. It sounds like they're just delaying another 6 months, another year.
Aren't even paying now. They just threw their hands up. Because a lot of them, they bought these properties. They realize that they're not equipped to rehab it. They don't do a proper budget. They don't know what they're doing. Too many people have gotten into real estate now that don't know what they're doing. And then what they're doing is they're pooling a bunch of money together, okay, which is even worse because now you got, all these investors and 10 different owners, and it's a mess. So there's a lot of real estate in the market right now that's distressed. And the sellers are ready to just walk away. Hopefully, a lot of them are personally guaranteed. That's not good. The ones that are not personally guaranteed, they'll just walk away. But the banks have to get it in their head, get this off our books. But they don't want to do that. You know why? Because if it gets out, then the value of the stock will go down in that bank. Why? Because the bank is only worth the value of the loans.
So you're saying a lot of these properties are completely underwater. It's not like they just wiped out the equity. They owe.
So again, to me, this is sounding a lot like the 2008 housing market crash. So again, a lot of the same stuff, a lot of the same kind of thing that happened. A lot of pray and delay when it comes to the banks, signing off on loans that they maybe shouldn't have signed off on that these sellers can't really afford to keep up anymore. And basically the loan comes due and they haven't made a cash flow profit from it yet. And so because of that, they had to sell the properties back to the banks, and the banks can't get rid of the property and they can't sell it out to anybody else. And so that's kind of what's happening in the entire market. And that's the craziness of the U.S. real estate market right now. And again, this is one of the greatest investors in the country. So this is one of the reasons I'm playing this. And then Graham Stephan kind of documents a lot of those greater entrepreneurs and investors that are well known. This is a multi-billionaire, this guy. So very interesting to see his take on it, on how he's selling everything, but how he's kind of wishing that he didn't, because there's different things that he could have done and gotten around because the banks haven't exactly, closed their deals yet.
They're all over the board. I've looked at properties that are barely keeping their head above water. I've looked at properties underwater. I've looked at properties that are drowned. I looked at 200 apartments the other day, empty. The guy just called me on the phone. You witnessed it. He just told me, I got this 304-unit building for you. It's 20% occupied. Oh, and then in Florida, a lot of people got hit by the last storm. Flood coverage is not much if they had flood coverage. So now they're sitting here. I looked at a 16-story building the other day, shut down. Right here, 20 minutes from here. I looked at hotels on the beach, shut down. Why? Because the flood kicked their ass, and now they need all this money pumped back into it. Some of them have been shut down by the city. They got red tags on them. And somebody needs to come in with major capital and put the place back in shape. But in order to do that, you have to buy it right. And the banks have to realize, listen, we screwed up. Things happen in life. Okay, the flood came, interest rates are up. These are all things that cause major distress. They got to realize it. They got to just cut their losses and move on. And then we're just waiting for them to finally do it. We're starting to see a little, but not a lot.
So are you getting good deals now?
I'm getting a lot of deals where the sellers are cooperating. They're a little walk. But now we have to go to the bank. We got to go to the bank and say, listen, you got to do a short sale. You got to do a short sale, or, you got to take a loss. If you don't take a loss, you're going to be sitting here with a property that's going to keep deteriorating, and there's no future except going down the toilet.
So what are your predictions then? How will this sort itself out?
I mean, sooner or later, the only solution is the banks have to say, okay, these are our troubled assets. Let's get them off our books and move on.
How could you be wrong? Like, what would need to happen?
Many times in history.
So there's no way that there's any other alternative solution?
I can't think of any other possible way, except it's all about cost basis. Okay, you got to have a good cost basis when you go into a deal, and then prepare for all the rehab that needed, and you got to bring up the operating. Okay, especially the place is heavily vacated. I mean, the numbers got to work for an investor. Why would an investor go in and overpay for something and not make any money? It makes no sense.
So the reason that you have this $70 million right now that you have to spend is because the
I don't
1031.
have $70 million to spend. Only got
Well, I guess now because, you bought
50,
the Tesla dealership, the private
47.
school.
I just sold a Harley Davidson dealership yesterday. 47, 57, 60. All right, close.
So you have $60 million-ish to spend?
That's correct.
And the reason you have this is because you sold a
I
bunch
sold
of
some
portfolio
major
properties.
assets that I didn't see. I felt like I got to the point where it was the best that I could do with these properties. And I thought, which I was wrong, that the banks would be more encouraged to play ball right now, and they haven't.
So do you think that it was a mistake then to sell the properties?
Before I get to that, got to take one short break here. 1 second. 1 second. Be right back. Be right back. Okay, we're back. Sorry, I had to clear up some storage to make sure we could keep going here.
Some of them, yeah, some of them I should have held. But I was also kind of worried about the future of some of those properties. Okay, why did I sell Harley Davidson dealership yesterday? Why?
Sales are down, right?
I believe so. And also, I felt like this. I try to use common sense. In my growing up, Harleys were really a big thing with guys that are now today, 50s, 60s. After 60, you ain't riding no bike much anymore. And I felt like all the new generation, the new money, wants the, fast race rockets. They want a different type of bike. I think the old Harley style, except the police still use them, I think. I think it was just, it's going away. I mean, that's what I felt like. But it was a beautiful property. It was a great operator. I just felt like, you know what? Why take the risk? I sold a Home Depot. I sold a BJ's. Why? Because I felt like the area was declining. The shopping mall right near it was doing pretty bad. So I felt like, you know what? I've been with these assets. They've been good. Let's move on. But I still got some term on the lease. Let the next guy, maybe he sees a different future than I do.
Why'd you buy a Tesla dealership?
Would you trust Elon Musk to pay you rent?
Absolutely.
Well, there you go.
What's the cap rate on that?
Close to 6. Yeah, we're a hair under 6. So I was pretty happy with that. It was brand new.
I didn't even know that this guy.
Thriving area. And
I didn't even know that this guy literally bought a Tesla unit. That's kind of awesome.
I felt good about it. When I got there, I looked around, I checked it out, and then you got all this stuff going on with SpaceX and all this autonomous stuff. And listen, it's definitely the future. We all know that. It's not just the electric car. It's the cutting edge of technology, with him and that company.
So Elon Musk rents your real
So
estate.
it's important to notice that one of the other reasons Ben Mallah has been so successful is because pay attention to what he's investing in. Some of the investments that he's made over these past recent years have been a Tesla unit. And so essentially, he's investing in the future. He's investing in autonomous robots. He's investing in autonomous vehicles by investing in commercial properties that produce an income from these kind of clientele that come in and pay money to Elon Musk and his companies. Well, guess what? He who owns the land where that company is built on, then you get to make some cash flow from that. So this is commercial investing. And so this is what I'm a big fan of, commercial investing. This is why I like to really work with commercial investors in particular. This is a great way to make money. If you've seen the movie The Founder, all about the Ray Kroc, the founder of McDonald's, one of them, and essentially his business attorney or financial attorney tells him, he's like, you don't make money by selling the burger. You make money by the property that owns the kitchens which make the burger, and so basically, again, commercial investing. So he's buying land where they build, he's buying commercial real estate where basically commercial real estate happens. So again, you buy a property where there's a McDonald's on top of it. That's commercial real estate, and then you enjoy the cash flow from that, and that's how you get into franchising, and then basically you keep on going and you make the money, and you're basically in a deal with that CEO. And the CEO has to pay you as the real estate investor, the one who owns that land, all those land rights. So that is why commercial investing is one of the best ways to make passive income. If you ever come into a lot of money, then you need to talk with me, and we will get you hooked up on your commercial investment property. You want to buy a Tesla factory, you want to buy a Tesla autonomous robot, you want to buy a SpaceX lot, then talk with me.
How much does he pay you?
Or Ben Mallah.
I don't know, about $1.3 million a year or something. So $100,000 a month, roughly.
And what's
You know what $100,000 a month to him is?
Nothing.
It's like you go in the store and buying a soda, probably.
It's actually probably even
Plus,
less.
the place is making money. You know, I'm sure
he
it's
probably
great.
makes that a minute.
Listen, before Tesla decided to commit to leasing that place from the developer, I'm sure they did their homework. The next Tesla is an hour away in Orlando, okay? And I'm sure they did a lot of thought process into that location and you know, having a plan for it. So, you know, I'm sure they're not just opening up dealerships just for the hell of it. They're doing it strategically.
So how much does it cost you then per month on the debt service on that property? Like, how much are you netting of this $100,000 a month?
Okay, I don't, but let's say I leveraged it all. Maybe I did 100%. I could do that. I could do it between a line of credit and a conventional loan. I could do whatever I want. But, you know, if they're paying me 6 and my debt's costing me 5, I make a point on, I don't remember what I paid for it. What did I pay for it?
$22 million.
How much?
22, I believe.
22. I mean, the point is this. The reason why I bought it was because if I go out and buy something for $22 million while I'm in a 1031.
So again, this is how a 1031 tax exchange works, okay? So full 1031 exchange, you sell the relinquished property, $2.35 million gain, $2.35 million net proceeds, $823,000 of deferred tax liability, depreciation, recapture, federal capital gains, state capital gains, and net investment income. All that money goes right into that $2.35 million in net equity available to reinvest. So you have 45 days to identify the replacement property. So within that 45-day period, once you've basically said, hey, I want a 1031, I want to take the net proceeds I've made from this property and I want to plug it into another property so I can keep investing and keep going. And then you buy a replacement property. $9.4 million purchase price, $2.35 million down payment, 180 days to close on the replacement property. So this is typically how you'll see this kind of working when it comes to a commercial or 1031 tax deferred deal.
I have a choice. I could buy that, get a return, or I could write Uncle Sam a check for probably in the neighborhood of close to $4 million.
Instead of buying a Tesla dealership. So you got basically $4 million discount.
Buy the Tesla dealership for 20-something million bucks, or write Uncle Sam a check for $4 million.
So you have the $60 million in gains that you kind of do need to spend. I'm curious, does it ever make sense just to pay the tax?
And really quick, I just want to say,
improve their life.
A big point of our last discussion was that you're trying to lean into retirement, but by retirement, you mostly mean being done with real estate. It's
not done. I'm always going to be around till the day I die, as long as my brain's working. My kids are going to get on the phone with me. They're going to ask me questions. We're going to make decisions. You don't really ever retire when you have a real estate portfolio and you plan on turning it over to your family. You don't retire. But I could be on my boat anywhere, or I could be in any country on the phone, and I can consult from anywhere. I enjoy doing consulting. Consulting is going to be a big part of my retirement. Helping people.
Are you trying to lean away from value add, like distressed assets with high operational carry, or are you and lean more into like triple net, safer, like the Tesla?
It's a combination of both. In my position, and this is not for everybody, in my position, you have to be diversified. You can't just focus in on one type of assets. You know,
Yes.
You got to be diversified.
So true.
So that gives you stability. Okay, something you need to learn about. Stability. You're very unstable. Mentally, maybe not physically, but financially. How many house hacks how many people you got living in your freaking house? You wake up in the morning and you got people strangers
I got
in your
4
goddamn
people.
house.
I got 4 people living in my
People
house.
you have
5
in your house.
because one of them has a girlfriend.
one's moving out though. So
I'm also going to be moving out and maybe selling my property too. So if you want a sub 3% deal in Las Vegas, let me know.
Yeah,
Michael,
sub.
it's not worth his time to be sub-2ing
The only
a deal.
sub I
at 3.
want is a turkey sub. What are you buying me for lunch today?
I'll buy you a turkey sub.
Turkey sub.
Yeah.
So basically, listen, I like diversification. I feel like I'm stable. I've got money in triple nets, like the Tesla dealership. We just closed a $43 million apartment building where my son's a partner. All right, he's rehabbing it. He's getting it all going. He's actually physically there, being the manager. He hasn't done that in years. He normally has a property manager. He supervises them. But this project, he's moved into the apartment building. My son lives in $1 million home. He's a multimillionaire. He packs his family up and he moves into the building.
This is the way to do it. And remember, when Arnold Schwarzenegger came to the United States of America, what did he say was the first thing he wanted to do? Buy an apartment complex, an investment property. This is the way you need to be thinking. Honestly, a lot of real estate agents will tell you this because those real estate agents are trying to do the same thing. But I will tell you that because that's just the way it is. If you have made some good income, then you need to be thinking about commercial real estate, making those triple net investments. You need to be getting into those kind of investments. Buy an apartment complex and find a way to do it. Find a way to make it work. You know, there's so many ways you can make a real estate deal work, and he goes on to talk about more of this. But this is the way to generational wealth.
Does that make you proud?
He's processing maintenance requests. He's collecting rents. He's doing marketing. He's got a construction project going on. I mean, listen, when your kids act like that, you know, you got to keep backing him. You got to keep supporting him. And then the other son is in Tallahassee on a project he's a partner in, rehabbing it right next to the university.
I saw that video that Ben Jr. did. I was really impressed.
It's really
by
good.
it.
Yeah.
And it's real.
Yeah.
And I was out there the other day with him. It's real. It's not.
So he's living in the apartment.
He's
complex.
living in the apartment. Why? Because he's got his hands on it. He's got control. He's going to get that place running right, stabilized. Of course, eventually he'll bring a manager in, but he's going to make sure that it's in the right stage to bring a manager. Plus, he's got major construction to do there. He's got about 50 apartments he's got to build from a shell.
You think that always makes sense if you're getting started in, not that he's getting started, but for those that aren't experts in the field, if you want to get into your first deal, especially if it's multifamily, it makes sense to actually live in the property.
Well, you don't necessarily have to live in it, depending on the size of it. It was such a big project. He said, I'm not traveling. I'm just going to stay here. Otherwise, you have to drive 2 hours each way.
So you don't think that you'll ever fully be mostly done? Like you're always going to be working? Because it seems
I am contemplating and thinking about hiring a sharp kid that I met, trained in New York, on a corporate level to help me manage the portfolio, because he has a lot of the skills that, see, my kids have been in the trenches, and we need to add a little more corporate type
structure
to
what would
the
that
management of portfolio.
What would that do for you?
I got a kid that, I call him a kid. He's no kid. He's probably, I don't know. Well, he's not even 30 yet. Anyway, so I'm trying to get him aboard because I like what he can do. What I've seen him, I have him come down here sometimes. What he can do in a matter of a couple of hours on a computer and spreadsheets and all this stuff and formulating things takes me days.
Well, he's just using Claude, most likely.
Huh?
He's using Claude, most likely. And he's just typing in
Claude,
numbers.
which we love.
I can have a conversation with him about basis, taxes, returns, leverage. I can have a conversation and we can have a serious discussion.
Yeah, but Claude could do the same thing. You just talk to Claude. It's going to...
Claude's more. Listen, it's not the same. It's not reality. It's artificial.
Would you say that doing one individual big deal requires a completely different skill set than managing a bunch of different portfolios and relationships with the bank and this and that? Like, what is the main differentiating factor between $500 million portfolio?
Really quick, I just got to say, I've not had a piece of technology blow my mind in a long time.
Again, this is another big part in this entire interview.
Let's chat about the first.
It's important to notice that this is the way to generational wealth, is to focus on commercial multi investing, right? Commercial investing, triple nets. This is the way to do it. And so Ben's about to explain the importance of really these different business models, portfolios versus big investments.
With the property, but basically, if you want to buy real estate, you want to own real estate, I highly recommend you run it yourself. Get your hands dirty. That's the best experience you will ever get. If you want to go out tomorrow and stop being a house hacker with all these strangers walking around in their underwear every morning in your house, go out, buy yourself a fourplex. I don't believe in less than a fourplex. You got 4 tenants paying your rent.
This is literally what I'm always saying on this show. Buy a fourplex, buy a triplex, buy a fourplex or a fiveplex. Whatever you need to do. You start that LLC, you develop it, and then you get in on these multifamily investments. This is the way to do it. And the banks will give you better terms on a loan for this being your first real estate investment than it being a single family residential. You'll get better terms on that loan if you're going to invest in multifamily real estate first. Believe it or not, a lot of people don't believe that, and they do it wrong. They do it in the wrong order. They go and get a regular single family residential property first, and then they say, okay, we'll get our multifamily in a few years. But actually, the banks are going to be willing to work with you and give you better terms on a loan in the future for a single-family residential if you have an income property that's generating income for the banks. They're going to be willing to give you more on that entire loan. A lot of people won't tell you that, but this is the truth.
Okay, and you should cash flow fairly well if you buy it right. And it's not a lot of management. But manage it yourself. You collect the rents. If there's a problem, send the handyman over to fix it. There's not much else to it. And pay the bills. There aren't any bills on a fourplex. Your tax bill, your insurance bill, your mortgage bill. And then you got some maintenance. That's about it.
I got so tired of doing that, though. It was just exhausting.
You don't want to work. I can look at a guy like you in a minute and say, this guy ain't going to work.
I like to wake up and not have a single care other than just, here's a task I got to do, and that's it.
You're from California. You want everything easy.
I got to say, I just sold 2 of my multifamily in Los Angeles, and every day I wake up that I think I don't own that anymore. Oh,
well, that's because you've experienced it. But we're talking about somebody starting out. You've experienced it. You looked at the situation. You said, you know what? These things are a pain in the neck. I live far away in another state. I've already, if I sell it now, the numbers probably made a lot of sense, even with the tax ramifications. Oh, yeah. And you made a decision. You managed your portfolio. That's what I do all the time. I look at a property. I say, okay, is this property a pain in the ass? Well, whether it is or not. It's not going to be a pain in the ass to me, too much because, I got people to run it. But do the numbers make sense? Is it best to keep it? Is it best to refinance it? Is it best to sell it? You got to make decisions when you're managing a portfolio. But if you're just getting into real estate, you got to get your hands dirty and run your own stuff. You have to. That's the way you'll know whether you want to grow in real estate or you don't. A lot of people don't.
Well, one thing that's pretty clear is that you have a beautiful home here. 20,000 square feet that you're selling.
It's for sale.
What's the asking price?
It was asking $35 million. Why? Because if you go anywhere we're in a special little city here on a private beach.
Yeah.
If you go anywhere in our area on this beach, people are paying $8 to $10 million for a single lot, and knocking down a house. This house, the land alone has a value of 20 to 24 million. Okay, it's just, I can prove it. To build this house with the qualities that this house has, I haven't had the contractor's bills that built it. Okay, you're going to spend minimum 25 million. You have to, with the bowling alleys and the lazy rivers and the quality of all this stuff. Okay, so here you are. You're somewhere in the neighborhood of 45 plus million. So I put it on the market for 35, and you have to wait 4 to 5 years to build it.
Mm-hmm.
So here we go. You could turnkey, walk into this house, less than what the replacement cost is. Okay. Right now, we lowered the price to 31.
Have you had any offers?
I've had about a half a dozen showings, but honestly, nobody has made me a realistic, legitimate offer that I would even consider.
Why?
Because people want you to carry, or, people want to do some creative stuff. They all had the money to buy the house because we pre-qualify them before we let them look at the house. But listen, it takes time. And the market is so small in this price range and in this area. Now, if this area was in South Florida, if this house was in South Florida, forget about it. It'd be worth $100 million in certain areas, like the area you were talking about earlier. Okay. But it is what it is. It's a great house. You just got to find the right buyer for it.
What happens if you can't sell it?
I just keep it. What am I going to do? I can't sell it. I keep it.
Would you sell or finance it?
No, I'm not like that. Listen, why would I have to sell or finance? I always say to myself, when people offer seller financing, beware. There's a reason why. Maybe it's helping them tax-wise. Maybe. But typically, let them go to a bank. Why do I need to be the bank? Why can't they just take the down payment and go to a bank? Maybe the bank won't qualify them. Well, if the bank won't qualify them, why the hell would I qualify
What's
them?
your interest rate on this property?
Oh, I locked in a good rate on this thing.
2% interest only, right?
2.5.
So you could sell it, seller finance
I'm good.
at
It's
3.5.
only for 15 years.
That's incredible.
7 years have gone by for 15 years.
So you get
now.
7 years at
wait,
2.5%.
wait. I got about 9 years left at a fixed rate loan, interest only on this house.
But you
So
could
it's not
make
hurting me.
1% or 1.5% if you seller financed it at 4% or 3.5%.
For 7 years, yeah.
Yeah, but I wouldn't do it. Listen, I don't want to be the bank. I don't like loaning people money. That's not what I do.
Yeah, but you're loaning the bank's money.
And if
it's
that
not
person
really
goes
your
belly
money.
up, then what?
Then you
I
take
gotta
back the
foreclose on them?
Then you take back the
I
property.
don't like doing that. I don't want to go after people. I don't want to be in a bad situation. I don't like to be.
You want people going after you?
I want people going after me?
Yeah.
What do you mean, people going after me?
Well,
I pay all my bills, so nobody goes after me.
Right. You'll take on debt, but you will not release the debt.
I'll
You
take
don't
on
want
debt all day long because that makes sense for me. I make money on the bank's money. Plus, I'm able to spread my money out, much more by using the bank's money.
And this is the difference between business debt and personal debt, right? Ben Mallah is talking about business debt and how he utilizes the bank's loan basically for leverage. And he leverages that with real estate income. And then over time, he makes a profit over the course of 5 to 7 years, which is, again, that commercial real estate game.
How much money do you have to buy a $30 million mansion?
Typically, you're going to have to qualify, but if you're going to buy a $30 million mansion, you probably have to go out and get a jumbo loan. A jumbo loan is probably going to be at least 25.
So again, jumbo loan is a large-sized loan issued by private financial institutions that's for highly priced properties at least $500,000 or more. Not backed by Fannie Mae or Freddie Mac, more stringent requirements than a conventional loan. And then you have your standard traditional conventional loan, which is a more general umbrella term for any privately issued opposed to federally subsidized mortgage. Can be either conforming or non-conforming. They're set within a size threshold to annually be by the FHFA and can be sold to mortgage market makers, Fannie Mae and Freddie Mac.
Percent. Okay, 25% of 30 million, 10% is 3, 6, 7, 8 million down, and you have to qualify for the loan. You got to prove, how am I going to pay the loan? And then you got taxes, and then you got insurance. You got to make a substantial income to be able to buy a house like this. Or a lot of people that own houses that will buy a house like this typically, have that kind of cash that they want to just buy it or put a lot down, have very little mortgage.
So you're selling a $30 million mansion. You've had a handful of showings on average. The people that come see the property and want to buy it, how much money do they have?
Typically, I would think that the rule of thumb in banking is if you buy if your mortgage, let's figure it out. If your mortgage is going to be, let's say, 20 million, right? 20 million, today's rate's probably about 6%.
Uh-huh.
Okay. So that's going to put you at $1.2 million a year, correct?
Mm-hmm.
Is that right?
Yeah.
20 million is $1.2 million a year, is 100 grand
Correct.
a month.
Multiply by
Well,
3.
if you got to pay a mortgage of $1.2 million a year, you probably got to be making over $3 million a year to qualify.
But even so, I heard that if you're buying like anything over 15 million, you don't really fit the 33% rule because those people kind of spread their money out a little bit
Depends
more.
on your assets.
So realistically, like wouldn't they, like you have to have like $100 million like to justify a 30 million.
No, you wouldn't need 100 million. Listen, if you can prove you have stable income coming in of a few million a year, the bank will loan you,
I don't think someone who's worth $20 million is buying a $30 million house,
no.
even if they have the income to do that.
I don't know. I mean, but no. Listen, you got to be somebody that's not going to hurt you and to buy this house. It's got to be somebody worth probably, like you said, 60, 70, 80, 100 million.
What about buying a $10 million house? How much do you have to be worth?
I mean, a $10 million house, I would think you have to be worth minimum 20 million.
You think that's responsible if you're worth $20 million to spend 10 on a house?
Depends on what your income is, too. It's not just a question of your worth. Okay, you can be worth a lot of money, but, what's your income? What's your returns? What's your investments? The bank looks at the whole picture.
Also, I'll caution you again to this hitting the...
Hit Jack
because
instead.
I know our editor is going to be like, yo, just like...
Just hit Jack instead.
My head's down here.
So...
How much time do you guys have? I need a cigarette. I didn't even smoke.
If you need to take a break, we'll just...
We can pause whenever.
I'm going to go have a cigarette, man. In Scotland, I just came back from Scotland. You know what they call cigarettes there?
So anyways, when we look at this entire Ben Mallah interview, you should be learning a lot about commercial real estate investing and taking this to the place that it needs to go, which is how you can leverage this in your everyday life, right? Why you should get your money up. Because, again, commercial real estate is a great opportunity to invest in triple net properties, and it allows you to really make a solid generational passive income. And that's kind of why I'm such a big fan of commercial real estate investing, okay? You make enough money to essentially buy a Walgreens. You end up buying a Target center. You buy a AI data center. Some people might hate you for that, but at the end of the day, you have to think about making cash flow and how to make generational wealth for your family. And it all starts with a multifamily, a 3-plex, a 4-plex, or a 5-plex apartment complex. Okay, so this is where you need to begin. This is why we're watching this, to educate you who is watching on how to really get into the game of real estate in the smartest way possible. And then you work with me, of course, Brendan Ecker, and we find you the same kind of deal in Michigan here.
$30 million, 20,000 square foot house. How much does this cost you per year?
We're going to push this forward a little bit. Let's see what else they have. Best sectors right now. Sponsor. Let's see. Spotting motivated sellers, 16 Flory. So should you buy a house? Start here. So, new Harvard report, the U.S. housing market just flashed a major warning signal for 2026. A study from the Harvard Joint Center for Housing Studies identified 2 factors contributing to shifts in the market.
Now, a lot of people say in terms of single family that we are in a housing crisis, but there does seem to be a lot of inventory right now in the market for single family homes.
Nobody's buying houses right now. Why? Because they don't. It doesn't fit their budget. It's 6.5% interest rate for the house they want. They got to pay 6.5% interest rate. They got to pay principal. They got to pay insurance. They got to pay taxes. Now is the time to rent.
So
now is definitely the time to rent.
So what do you tell people when they say, should I buy a house right now?
I mean, if your budget can handle it and your lifestyle requires it, or it's a necessity, and you can handle it, then yeah, you always buy a house if you can afford it because it's a personal thing. It's not really an investment. Houses are not investments. Typically, yeah, you buy a house and you live in it for 5 years. It typically appreciates. You make some money. After 2 years, you don't have to pay no capital gains tax up to $250,000 or $500,000 if you're married.
That's
it works.
true.
It works. But it's not an investment, really. House is a personal purchase. And never buy them for investment unless you're flipping it.
Yes, this is such an important statement that Ben Mallah just made. A house is not an investment. It's an investment once it starts making an income for you. Okay, and that's the difference between an asset and a liability. Everybody thinks that their house is an asset, but it's only really an asset until you've made a profit on it or until it is making you a profit on it, right? So a rental income property would be considered more of an asset. Just a regular single-family residential, you live there with your family, not really the greatest asset because it's not making you money until 5-7 years down the road, like Ben said, when you would actually sell that home ideally, or even probably not even sell it, right? In this kind of market, who would really even want to sell? You'd hold on to that real estate. I'm a buy and hold kind of guy myself. So everything Ben is saying here is correct.
I mean, typically the best, smartest thing to do is you buy a house and you improve it. Because the house is there's a reason why a house is not selling too. Okay, because there's something wrong with that house. Maybe it doesn't have enough bathrooms. Maybe it's too small square footage. You come in and add value to the house. Maybe it needs to be fixed up. Whatever the story is there a solution to the fix? You come up with a solution. Do the numbers make sense based on what you're buying, based on what you're spending and improving, and what the market will pay for it? And you want to be below the market so you know you can sell quick.
This is the first time, though, that I've ever seen it where people are getting less than the price that they spent fixing it up. Because it seems like the prices right now for materials and labor, people are overspending. So they might put, I've seen $500,000 into a property, but they might only get back $375, $400. So they're taking a lot to fix it up.
Nobody knew that the price of gas was going to go to $5 a gallon. Okay, that affects every aspect of our human life. Everything you need is tied to oil. You know, because the cost of making stuff, the cost of shipping stuff. So now, because the price of that went up, the price of everything goes up. You have to, nobody has a crystal ball.
And this is the petrodollar. If you follow my other YouTube channel, Ecker Geopolitics, or you follow the Collegiate American on Rumble, where I talk about all of these issues, more geopolitical kind of analysis. I haven't talked about it in a while. I'm taking a short hiatus from that. But we talked about the petrodollar and the oil markets, and we constantly covered the oil prices. And we'll be jumping back into that show shortly within the next few weeks. But ultimately, when we look at what's really happening with that, that's why this is so important. Oil absolutely is one of the most important markets, and it does affect every other market.
This is what I thought that would really help the housing
market. Especially the United States economy.
I wish they do this. Imagine if they said, for people that build a house in the next 10 years, if you build, your profits could be tax-free. Imagine how many people would build a house everywhere they could. It seems like that would completely solve the housing shortage. If they just
about profits for who? Somebody buying them just to sell it?
Yes, a builder adding a new housing unit onto the market. If you're able to add, if you take the risk, the time, the capital.
How's that going to help anybody except make the builders more money?
Because it adds more supply into the market. More supply should lower the prices.
Well, it's not so much. I mean, listen, the cost of building is not cheap. There are so many developments right now. I bet you we looked at.
So if you were to get your builder's license in Michigan, which I highly recommend, I don't think that's a bad thing. I think that's definitely something people should do. Definitely consider getting a builder's license in Michigan. Is one of the most prominent things you can do as an individual basis to make money, however, right? Because what Ben is saying is that, basically you're going to take a lot of the costs out of, having to pay for all these, basically go outside of the market for people building the structure, architects and all of that stuff. A lot of it will be more commercialized, and you'll build a business out of that. And you'll be the builder, you'll be the contractor. So ultimately, that's kind of why a builder's license is positive. But everything Ben is saying here is going to be correct, and he's spot on here.
You go to Lennar's, or you go to all these places, I'm sure they got plenty of developments where they can't sell those houses, and they already built them, or they had plans to build them. Stop kicking me.
Jack.
You ready to eat some?
I didn't know that was your foot. Yeah.
Have a bite to eat?
Yeah.
All right, let's have a bite to eat.
Right now?
Sure, if you're hungry. Yeah, we can take it.
I mean, we'll eat quick and then we'll knock it out.
All right.
What time you guys got to get out of here? Or what?
We don't. Today's your day.
So you got another ad. So
websites your competitors
when we
don't
look
want
at
you to
this, again, this is what Ben is saying. A builder's license is always something good to have as an individual. But to answer Graham Stephan's point here, if we were to take taxes out of the entire basis, then you're really leaving out a lot of the profit for everybody else when it comes to that entire process. So again, you got Ben Mallah just chowing on spaghetti here. So again, we're beginners. So your banker comes before. So again, let's get back to it.
That's an important thing if you're trying to build wealth. Then, this seems
because
like
you need their money. You got enough money to buy a piece of real estate? No, average person don't.
Yes,
you got it. The bank is your best friend.
So without really the system we have in place in the United States, right? It would never allow you to basically take a $250,000 loan from the bank, right? You wouldn't be able to put down that down payment without the loan. And so without the loan, you wouldn't be able to leverage and make a profit from it. You'd have to have all that income on point and all that equity on point, on hand, cash in hand at that time. And so a lot of people don't even know how to save their money. That's a real thing. And so this is what Ben is talking about, leverage. And that is the beauty of America. All the way from the British Empire, real estate was always key. And real estate is leveraged by the borrower is slave to the lender, and then it goes on so forth. That is how the dollar and the currency, that's why currency is called currency. That's how it works. It's like a river. It's like a flow. Money is a currency.
And in the world, your bank comes before your wife.
Really? So if your banker calls at the same time as your wife, which one do you pick up?
The banker. My wife knows. Well, banker calls, done. Nope.
Because, again, that's so important because he's absolutely right. Because guess what? If you're not making money, the wife leaves. If you're not making money, if you're in jail because you did something wrong or against the banks or whatever, then you can't really help your family in that aspect. So yeah, the banks do become before your wife in this current economy. In the world that we live in, it's something that people have to realize. So I love this statement here because it's absolutely true.
What is more important than your Banker.
Okay, what about your wife and your banker both want to go out on a Saturday night, 9 p.m.? Who has priority?
Typically, bankers, you don't have to take out on dates.
It's not a date. It's just a business meeting. They just say, hey, Ben, I want to...
Yeah, you don't do banking after hours. You do lunch meetings, stuff like that. But the point I understand trying to make is, if you're in real estate, banking is the most important person in your life is your banker.
So if you're trying to develop a relationship with a bank, do you pick a specific bank or do you try to have relationships with multiple banks? Do you get to a point where you don't shop the rate they provide you anymore?
You'll get to a point where you don't need to shop around. But at first, you got to kind of see who's giving you the best deals. And whoever gives you the best deals, the best rates, the most LTV, you know what LTV is? Loan to value.
So again, this is another important term for you to know. LTV ratio, your loan to value ratio, okay? A financial ratio that compares the amount of money being borrowed to the market price of the asset being purchased, okay? So you have a debt to income ratio, which is how much debt you currently have how much debt you currently have versus how much income you're making. And then you have loan to value. So again, the banks give you a certain amount of money, and what is the ratio to the amount of money that you're actually borrowing and whatnot. So again, a financial ratio that compares the amount of money being borrowed to the market price of the asset being purchased. So very important term and terminology for real estate that you need to remember if you're ever going to be investing in real estate, and especially if you want to get into commercial investing.
People that are going to make your life easiest with the best terms, the best rates, then you'll end up throwing more stuff their way. Of course, it's common sense. But, I used to work with 10 different banks. Now I only work with one.
Who's the best bank?
In my world, B of A.
Bank of America?
Biggest bank in the country, in the world, I think.
Why not Chase or
Listen,
Wells Fargo?
I've dealt with Wells Fargo. I've dealt with Chase. I've dealt with them all. The problem is, when you get to my level, you need to have a brokerage relationship and a banking relationship. So you need two companies, or basically B of A is the parent company. B of A owns Merrill Lynch, right?
Mm-hmm.
So Merrill Lynch knows the brokerage. B of A knows the banking, right? So basically, my broker technically works for B of A because he works for Merrill Lynch. Merrill Lynch is under B of A. They tell Merrill Lynch what to do and control everything. It's a relationship. The broker goes to bat for me to get my loans. Why? Because I'm his client. And the more money I make, the more money goes in his brokerage. The bigger he is. It's all ties together. But I've actually believe I made it to the top level. I've been with every big shot bank there is. Okay? And I'm going to tell you, they've been the best and easiest to me. Not only that, when you have that kind of money to be in a brokerage, wealth management side, you're basically getting a lot of help because these people care about you. They care. They have to care because your well-being is their well-being. Okay? If you make more money goes into the brokerage. And they get credit for all the loans they throw B of A through the brokerage. Everybody's making money.
That sounds very similar to my second loan that I got. The first loan I got, I shopped it around with like 10 different places, got a really good loan at 2.875 during COVID. And then now I bought last year. And the problem was I shopped it around. First of all, couldn't get qualified because like YouTuber income is very hard to show. But I shopped it around a bunch of different places. I was getting 6.5%, 6.75%. And the best rate I got was actually through my brokerage. So I used Schwab.
Did you tie your assets up to get the loan?
I actually don't think that I did. I think I was able to leverage my relationship.
He got a discount. He got a discount because of the assets with Schwab.
I don't have to keep my assets there.
No.
It just showed because I was also having trouble qualifying, but having assets in Schwab, I was able to
tax
use
returns?
What?
You don't do tax returns?
Do
you file tax returns?
Oh, yeah. The problem, but as an entrepreneur, you have like weird money flows and routing and stuff like that. And this was confusing them and it wasn't like getting their seal of approval. And so I had to shop it with Schwab. And Schwab has Rocket Mortgage. That's like their Rocket Mortgage's parent company is Schwab.
Mm-hmm.
And so I was able to get the best deal by miles actually using the brokerage.
There you go. It's all about relationships.
So if someone's just starting, where do they begin? Do they go to Bank of America?
Credit
They
unions?
just like...
Listen, when you first start, it's a whole different picture.
Yeah.
You go wherever you can get in. Okay, because if you just start now, you're not going to walk into the bank like a big
100%.
shot and want to get a loan. It's not going to happen. Okay, like I said, it goes back to risk. If you're still a high risk person, then you're going to have to shop around. You should definitely, if you're a first time buyer, you should be doing FHA with low money down and the government backing a percentage of that loan. Okay, typically most people start with FHA when they want to buy 1 to 4 units. That's what I think. But when you first start out, you just got to shop around, get the best rate, like we all did. I used to borrow from hard money guys when I was in my 20s. Why? There's no bank would loan.
So again, a hard money loan is a type of loan that is secured by real property.
And then once I got established and I made a few bucks, then I went to the D paper. Then I moved up to the C.
Very important. Again, we'll go back to that a little bit. and we'll just go from here. A C-paper loan is a type of subprime loan targeted to borrowers with poor credit histories, typically defined by credit scores in the 580 to 619 range. These loans feature higher interest rates and stricter terms to compensate lenders for greater financial risk.
Paper. As I move up the ladder, the interest rate comes down and the terms get better. And then I eventually went to B, and now I'm at A. B of A.
George bought a domain from hosting,
So yeah, everything
but turning it
Ben
into
is
a
talking
website.
about here, it's exceptionally important.
Want to do so much consulting. I'm curious why you enjoy
Listen,
it so much.
To help other people, you have to do it to understand it. Okay? When I get off the phone
Right.
with somebody
This
knowing
is
that
why
I
I
made
do
an
real estate. 100%. I totally resonate with this.
impact to their life and I help them, I get a certain human feeling that money can't buy it. You can't buy that kind of feeling. It's just like I felt that I really did something in life. I accomplished something to help other people while I was on this planet. Okay? I know it's the right thing to do. Okay? It's like religion. Some people believe, in the religious part of it, they get some kind of special religious feeling. I get a great feeling by knowing that I helped people while I was here. I did it and I showed them how to do it and helping people improve their lives. If the whole world acted like that, it would be a beautiful, peaceful world.
What do you say to people, though, that want to tax you more?
Listen, running a country is running a business. We need leaders in charge that are more like accountants. That's what we need. We need accountants to be politicians because it's all about money.
Yes.
Like DeSantis is talking about, giving a bunch of property tax relief.
Mhm.
Well, if the counties can handle it and not collect as much as they collected because they have a surplus, I see them doing a lot of stuff that I don't know. The problem is people in politics are not business people. That's the biggest problem we got with politics. Okay. And then when we do get a business person, we get some of the, I'm going to say it, cuckoos, because why we can't find good leaders in politics?
Why?
Because nobody wants the job because of all the bureaucratic bull and all the people in politics that don't know about business. And they all got their wacko ideas on how things should be. They don't just look at what makes sense.
Yes.
Okay. What is the make sense that we need to do here that is just normal and pretty much is fair to everybody? Okay. Taxes. Listen, I got to pay 37% of all the money I make and earn. Okay. I think that's a bit high.
And this is like my problem with the eat the rich. You have a lot of Democrats and, not to get political, but you have a lot of Democrats who are really eat the rich and the rich are the problem. But actually not true. The rich pay more taxes than most people in this entire country. They pay higher tax rates than everybody. And so it's quite a different game. I mean, it's all proportional to the amount of money they make. They still have to pay. It's a substantial higher tax bracket than the average person who maybe has one job, one source of income. They have a single family residential, and that person only has to pay maybe 20% tax or 23% tax. And so it's all subjective based on your earning and which tax bracket you're put into. And this is what a lot of the Democrats don't understand. And again, I'm not getting political, but this is typically where it stands when it comes to banking, real estate, and business and entrepreneurship and how our country is built. So we can't be eat the rich. You really have to use the system and leverage it if you want to get to the highest ranks of the system and be able to actually have a successful and powerful country.
The first thing we need to do is let's look and have a real budget. Okay. Where are we spending money at? Where are we wasting money at? But nobody wants the job because there's too much bullshit that goes on. All the CEOs of companies, successful companies, they wouldn't touch politics with a 10-foot pole because you got all the people that don't belong in politics because they just want to have a ride the system job and they want to, push their ideas on you. And it's how they think things should go. Listen, and I'm sorry to say, people who are not successful do not belong in politics. If you never ran a business and you never created anything and you never had any experience running anything, with employees, and then you shouldn't be in politics.
I would vote for you. Would you ever run?
Never. Of course, too many cuckoos. I tried to get
And also, you have to remember that there's 4 lanes to real power when it comes to America. And, really, if you want to get to the highest ranks of American government, American power, then you have to use the system to its advantages. Okay? Ben Mallah is an entrepreneur. Ben Mallah is a real estate investor and a highly successful one. Rich, wealthy, very wealthy. And so this would be somebody who would be more a part of that donor class. This is somebody who would contribute to a political campaign financially, right? And that political donation would be substantially more powerful than him running for politics and being the face rather than just being a bank for one of the politicians. Okay, so there's entrepreneurship, there's law, there's media, and then there's politics. These are really the 4 lanes to master influence or power in the entire country that we live in today. Again, Entrepreneurship allows you to be like the Ben Mallah. You make a lot of money, and you can provide that kind of financing to these politicians and serve your political cause in whatever way. Or you can be the politician in politics, right? You run for your local government, you think locally, you act globally, whatever, and you get to be the face of that, and you get to push those ideas. But you're also funded by people like Ben Mallah. And I'm not saying Ben Mallah is any kind of donate. I'm not saying he makes any kind of political donations, but he's somebody who would be in that class of giving political donations. And then you have legal. So again, if you want to be a lawyer, that would be another sector of power and also wealth that would allow you to basically control and really kind of have some kind of leverage over the United States government, real power. And then, of course, you have the media. The media controls the minds of the masses. Influence, so kind of what I'm doing, right? You have a live stream, and you're giving your ideas out in a different way. Journalism, these kind of things. Media, okay? You're really influencing the masses in the way they think. And so the way they think ends up really resulting in the way political campaigns often go. Who wins in elections? Well, a lot of that is based off, again, people who are influencers. And so, again, entrepreneurship, that's Ben Mallah's lane, my lane. And then you have people who are in politics, who run for politics. They, very socialites, and they communicate with everybody. They're the face of it. They're on the city council, things like that. And then they rise to the government ranks. And then they get funding from the entrepreneurs. And then you have the lawyers who, allow these systems to be in place. They help write the laws. They help kind of, legislate the laws. And then you have, of course, again, the media who controls the way people think collectively in the country, which ultimately decides the outcome of elections. So these are the 4 areas that you need to focus on: entrepreneurship, law, politics, or media.
Town Clearwater, right? It's occupied by the Scientologists. It's a fact. I'm not talking bad about them. Yeah. It's a fact. They bought up all the real estate, and everybody's crying, oh, they own everything. Oh, they own everything. Well, you let them. Now, we don't have no tourism, and downtown is dead, okay? Well, they're always crying about that. Everybody's about it. Well, do something about it, okay? I went to the mayor, and I said, what we need it's across from the beach. The beach is here, we get tourism, but on the downtown side, on the bay side, we get no tourism. And we have this beautiful waterfront. I said, I brought in the designs and everything. Let me put a Ferris wheel right here on the waterfront. The kind that's air-conditioned, good all year round. It'll be a great draw. And people will come to Ferris wheel, just like in Orlando. They'll come to restaurants, they'll come to all the stores and shops around there, and we'll create a buzz, okay? Number one, the mayor straight out told me he doesn't have the power to approve it. Great idea, but he doesn't. I was going to pay for it. All they do is give me a little piece of land to lease. I would have put it there, bought it there. I would have even done shared profiting with them, profit sharing with them. He says, well, this city has a no-power mayor. The mayor can't even make a decision. He has to go in front of like 7 or 8 board members. And these people aren't qualified to run an ice cream store. I've seen them. They've never done nothing their whole life but maybe a government job, and they had no clue about business. They had no vision of the future. All they want to do is complain about everything. We have the wrong people in politics. That's the problem. We don't have educated business people.
Is this ever going to change?
100%.
Unfortunately, the way our society is, we got half the country that are doers and half the country that are just want to ride the
takers.
wave.
We got doers and takers.
You got Democrats, you got Republicans, and then you have your cuckoo, whatever. What do you call the other people? Anyway, the point is this. Everybody needs to come together and just do what makes sense and be fair to everybody. Of course, we need services. We need police. We need fire. We need the roads. We need everything. Schools. It takes a lot of money to run a place. Yes, you need taxes. Absolutely, positively, we have to have taxes. But do it reasonable. Do it where you get what you need. All this waste that goes on. We got people. How many people?
Federal government waste and improper payments for the fiscal year of 2025 were estimated at $186 billion by Government Accountability Office, the GAO, while separate congressional reports tracking broader questionable spending identified over $1.6 trillion. That's insane.
Well, in this country have jobs that we probably don't even need in politics or in bureaucrats. I mean, I'm just saying it. It's just with technology, these people should be more in private sector. Private sector is what makes this country run. Without private sector, you got nothing. You wouldn't have government without private sector, right? Private sector employs the people, and then gives the money to government, and then the government employs people because they're getting the money from the private sector.
Facts.
But, it starts with the public, and we just got to get rid of all these people running for office that just don't belong there.
Do you think it's easier than ever right now to get rich?
Hey, by the way, really quick, if you want extra content just like this, as well as
we
early
look
access.
into this is really why I agree with what a lot of Ben is saying. Everything he's saying is pretty much correct here. So very important to note exactly what he's talking about. So again, what do you think about this? What do you think about Ben Mallah so far in this interview? I think he's been right about everything. I think this is somebody who absolutely should run for, office. And we need people like that. I agree with what he said. We need more business people running for politics.
Too fat.
Ben, where are you invested?
Okay, let me explain to you what I did. I used to be a day trader. I got my ass handed to me in a crash when you guys were still selling in a Boy Scout.
Was that
you were doing.
Was that the 1920s crash?
No, 2008. Anyway, the point is this. You can't do everything in life, all right? You got to pick something and do it the best you can. You can dib and dab a little, but you know what I did was, goes back to relationships, okay? I let the experts do it. So basically, my relationship with Merrill Lynch is, yes, I'm mostly in tax-free muni bonds. That's where I like to be at because it's safe, and I can borrow against it, and it's tax-free. Mm-hmm. All the interest on that 5% tax-free is really like 8 or 9% to me. But I give them a piece.
Yes, and he's absolutely right. Again, if you have $1 million, and again, if you have $1 million, and if you contribute that towards tax-free muni bonds, you think about it, right? $1 million, and you're getting usually about 5% back you'd get from that. You're going to be getting $500,000 like a year. That's pretty good, okay, in returns. So not bad.
Oh, I don't know, whatever it is, 30, 20, 30 million, whatever it is. And they have their models where they have a team that discusses what's going on in the market, where they think that they should be investing in, what's good, what should they sell. They got like a dozen people that sit around a table and discuss this like pretty often. And then they manage their customers' money, which they get a very, a reasonable fee for. Maybe, I don't know.
Again, I said 500,000. If you were to put $1 million into a tax-free muni bond, you would typically per year, you'd be getting about $50,000 return every year in interest to yourself. So again, this is why tax-free muni bonds work. Okay, and so you have to talk to a brokerage. You got to talk to Vanguard, Schwab, Rocket Mortgage, or whatever. All of these things, all of these different brokerages will allow you to do that. Fidelity. And so you have to talk to your brokers, and you have to make relationships, like Ben Mallah is saying. Because again, $1 million into a tax-free muni bond, you're going to make $50,000 a year for the rest of your life. Not a bad gig. And again, you're going to get that like in returns. So it's not just going to it's not money you're just pulling out. It's money that you're getting in a profit. So this is why you need to think about how Ben Mallah is thinking here.
It's probably but don't you think you could achieve the same thing as buying an index fund?
I mean, yes, you can do that, but I ain't got time to worry about any of that. Because the reason why I'm successful in real estate is because I'm focused on what I know I can do. Okay? Stock market investing, leave it to the experts. But you got to be with the right experts. And they're going to have their ups and downs. But I believe in the past couple of years, they've doubled my money. I mean, I know it for a fact. I didn't give them 20 or 30. Okay? I think I gave them half of that 2 years ago.
You gave them 15 million and they got you 30?
I think
the market's up a lot, though.
I think it was
too.
like really,
the market's doubled.
Honestly, to be honest with you, I think it went from 10 to 25. A couple of years. Everybody's done well in the market recently, especially with tech. So, listen, everybody's got their own lifestyle, their own time management. My son likes stocks. I let him play with my little edge account. They have what they call an edge account where I can trade myself. I let him play around with that because he showed an interest. Mm-hmm. But, does he have an interest or is he just like gambling? That's the question when it comes to stocks. Are you going to do your homework? Are you going to look at the news? Listen, I was offered SpaceX by Merrill Lynch at its IPO 135. And I should have bought it. But I was busy that day with real estate, so I didn't buy it. Then I saw the thing go right up to 200. Like 200.
Yep.
And I said, I should have done something. But yeah, I didn't. IPOs are very rare lately. And then it came back down. I don't know where it's at now.
155.
150. Okay, so whatever. It goes up and down. Listen, I got no time to be on a roller coaster. The only way I could trade stocks is if I sat in that office and watched CNBC all day long and kept doing research.
Absolutely.
Oh my God, look at the price yesterday. I looked at the price.
What's the price?
The price yesterday was 137.
No, was it? No, go back more than a day. Go back more than a day. It was 155.
Yesterday it was 137.
Keep going, back.
That was several days ago.
No, it wasn't. Right there. That's when I was looking. What day is that?
July 9th, and today is July 15th. That was a week ago.
There's no way.
What is it now?
That was a
135.
Okay, so it's back to the IPO price.
Holy crap.
I'm just saying, how do you just write off what I say without having any idea what you're talking about?
It's the last thing I looked at.
Apparently you need to look at things a little more often.
It trades during the day.
Last time that was a week ago?
Tell me if you agree or disagree.
It did not trade during the day.
Okay, the people that are in the stock market, serious players, serious stockbrokers that are doing all this trading, okay, don't you think it's like a game you're playing when you're one of them, okay? Things go up, things go down, they dry. I always have this, I always had this conspiracy theory about the stock market. I could be wrong, but I think they all kind of know what they're doing. When something comes out, they buy the out of it, drive the price up, And then when it goes up to the price they want, they sell it, take money off the table, and they have their own system of making money. Okay, I really believe that. And I don't think they even communicate with each other. They don't have to. They just all know that, yes, IPO comes out, everybody's emotional. Ooh, it's SpaceX. He's a trillionaire now, blah, blah, blah. That thing goes through the roof to 220, and it's all hype. There's nothing. The problem I have with the stock market is it's not logic-based. If you look at their income, there are companies that the stocks go through the roof based on speculation of the future. Okay, there's so many companies that don't make a dime, and their stock keeps going up. Am I right or wrong?
Right.
I don't believe in that. I mean, yes, it's just a whole nother world that I can't be in. If I was in that world, I have to be in that office every day while the stock market's open, trading like I've done.
You don't have to. You just
and when the stock market's not open, I got to be doing research.
You just buy an index fund, and you average 6 to 8% a year,
let's say,
20 years.
Well, not necessarily. Index funds go down.
They do.
What about airlines? Airlines are getting crushed right now.
Yeah, but
the price of fuel, they're going out of business.
But if you look at the global stock market, like a big fund that covers the global stock market, even if airlines go down, something else will take its place.
Tell us a fund to invest in.
VTI, VOO, the Vanguard Index Funds.
All right. You're happy with it?
Yeah.
You recommend it? I believe it. You know, they got tons of
That's
people.
one of my recommendations, by the way. Well, I'm not a financial advisor, so I'm not giving financial recommendations, but I also invest in that, VOOG. Again, that's that Vanguard Index Fund. It's kind of an equivalent of the S&P 500 there. So, again, I'm not recommending anything, but that's kind of what I've invested in, and it has made a pretty good return over the past 10 years. So,
behind that, making the decisions. They're experts.
They might have invested more aggressively in a lot of tech. The Mag 7. I'm just saying an index. Like, I wouldn't even be doing that.
I lost money on BlackRock or Blackstone, one of the two.
Probably BlackRock.
You know, because they had some fund that, was speculative, too speculative with startups.
But if you owned BlackRock itself, the company itself has done incredibly well.
It's true. If everybody should do their homework and get their comfort zone and invest where they want. But there's no way that I can sit here and start buying individual stocks on a daily basis. It would drive me nuts.
But
I have to totally.
But here's what you're doing.
My real estate portfolio will go down.
Your Muni bond, because we're invested in the same one.
Nothing. That's a piece of.
But
it's a walk in the park.
But I'm saying the reason it's a walk in the park is because that Muni bond that you bought is a collection of bonds.
Again, a municipal bond or a Muni bond, like Ben Mallah is saying, is a debt security issued by a state, municipality, or county to finance its capital expenditures.
The fund is.
Yes.
So the index fund would be the same thing of stocks.
A year on that.
Yeah, but the Muni bonds fund is only Muni bonds.
Correct.
Muni bonds, and I know somebody's going to say I'm wrong because there have been very, very, very minuscule occasions, don't fail unless you go to Puerto Rico. Muni bonds don't fail. They may go down. They're tied to interest rates.
Yes.
But at the end, you're going to get paid back. Okay. So I like muni bonds because I believe in the government. I believe in the municipality's not going to, fault on a debt. And 5% tax free to me, like I said, it wasn't always 5%. When interest rates are really low, you only get 3%. Okay, so I'm upside down in some of those muni bonds, but who cares? At the end of the day, I get my money back, and it's tax free income. But right now, if I buy a muni bond for 5%, in fact, I bought $1 million one yesterday. I know I'm getting $50,000 a year, tax free, and I could borrow up to $900,000 at like 3%. If I want to borrow against it, or 3.5. It works for me. It may not work for everybody else, but everybody's got to figure out what works for them. That's it. But, stock trading is something you got to be totally into if you're going to do it with real money. I used to go to bed at night and sometimes wake up in the morning and lose millions, and that would crush me. It would drive me nuts.
And it's important to take notice that if you are an everyday average Joe, right, and you don't have a high net worth, you don't make a lot of money, I agree with what Ben's saying. Okay, if you're not already a multimillionaire and then investing in stocks, really not even at a multimillionaire level. I mean, you got to think about, what the price of the SpaceX IPO was. How many people lost money on that one specific investment? And mainly because they were regular, average, ordinary Joes who were investing in this, and they bought like 2 shares or 5 shares, or maybe they got 10 shares or 20 shares. And, the more shares you make, the more you can naturally make from that long-term value, which is great. If you invest in Tesla, great. But, I remember when I was first getting into investing and when I invested in the stock market, I made the mistake of owning only 2 shares of Tesla, and I lost a lot of money. And even those 2 shares, it didn't make me a lot of profit when it did go up finally. And so I ended up selling that, and then I ended up doing what Ben Mallah said, which is more tax-free muni bonds, right? You're focusing on those mutual funds and ETFs, and you're focusing on, of course, real estate investments. You're focusing on multifamily real estate investments, triplexes, quadplexes, and that is where your brain needs to be. You need to think about how are you going to get the most out of your entire investment. over a 10 to 20 year period. You need the Warren Buffett strategy, and that's exactly what Ben Mallah's talking about here.
And do it. I don't have the tolerance for that.
That's why I stick with index funds. You're not going to lose millions. You might be down the worst in a day. The worst might be like a few percent,
if you look at
5%.
bond funds, a combination of all kinds of bonds managed by a bond manager. That's all he does. Muni bonds, different grade levels, different classes, but they're never going to fluctuate more than 5%. And then they go up and down, but no more than 5%. You're never going to lose.
Do you have any real life advice for either Graham or I?
I mean, listen, if you have money that you want to put away, like what I call a war chest, you got to have a war chest. In case the bottom falls out or in case some super great deal comes your way, you got to be able to tap into something so you don't lose the opportunity. See, the biggest problem in life is that a lot of people get opportunities, but they can't execute it. That's the worst thing in the world. I've been in that position. A greatest deal in the world came up when I was younger, but I didn't have the money to do it. I didn't have the wherewithal to do it. You got to stash that money so you have the muscle, the strength, and it's always there to protect you. COVID comes, your hotel's empty. What do you do?
Here's a question for you. What percentage should you have as a war chest? And does it matter, let's just say, if you have margin?
I think you should definitely stash as much cash as you can. All right? You always got to have enough money to pay your bills and live. But besides that, I mean, and it could be in investments like your index funds. Whatever it is, you got to have something liquid that you can access like that. You never know when you're going to need the money, whether it's for emergency, whether it's an opportunity. You never know. You got to stash
so is it
your
like
cash.
10%, 20%, 25, 30?
As much as you can. As much as you can. Now, I spend my money on real estate, a lot of it. So it's a different story. I may have, whatever, a couple $100 million in real estate, a couple $100 million here, a couple $100 million, whatever. I mean, I'm more diversified because real estate's my profession. But everybody needs to have something put away for that rainy day.
Graham is saying how much in cash for someone like Graham who has a diversified portfolio in index funds and stuff like that.
Nothing should be sitting in just cash.
No,
cash
but
equivalents, Muni bonds.
Tax-free Muni bonds.
If it's invested in something that you are comfortable with and you're happy with the return, that's good enough.
So I'm 25% tax-free Muni bonds. The rest is real estate and mostly stocks.
Everybody has different risk tolerance. I don't need to have a risk tolerance. I don't want risk. That's why I lean towards Muni bonds. I mean, I don't need to worry about really growing. I made enough money to last me a lifetime. Now I got to figure out how I'm going to pass it down to my family and generations, So, it's whatever you're comfortable with where your money's at. Me, I just happen to be a big believer in Muni bond funds and Muni bonds because I like the comfort of the safety and knowing when I go to bed tomorrow, even if you look them up in the worst crash possible, they're not going to go down more than 10%. As a total hits the fan, okay? Even when interest rates go way down, which ain't going to happen again, they're still not going to crash. It's still valuable because the government's going to pay back that loan, or the state or the county or the city or the hospital or whatever. Everybody's got their own, taste. My taste is being safe. I have a little risky, I let Merrill Lynch play with, but they've turned out good. Main thing is my focus is real estate. The point is, make as much money as you can and stash it away in things that aren't risky or too risky. But if a real estate deal does come your way, you want to be able to run that cash and snatch that real estate up. If you're going to make money on the real estate, that's what I do.
Is there anything else that you want to mention, like consulting or?
We try really hard to put out good content, that's entertaining and helps educate people and show them what the real life is. Listen, I'm not knocking anybody, but how many real estate guys go out there? I mean, yeah, you got your house people, but I don't really consider them in my world. They're doing houses, which is great for the people that want to do houses. I don't do houses. But I would like to, educate more people in the world. So, we focus on our videos. We go out there and show you what we're doing, how we're buying, what we're looking for, and analyzing deals, underwriting deals. We try to explain that and teach people that because you know why? They don't teach it in school. They don't even teach you in school how to run a bank account. Do you believe that? Kids are graduating high school, 18 years old, never walked into a bank and made a deposit. I had to teach my kid how to make a deposit. Or, now it's online or even online. I mean, listen, educating people so the world could all grow together is what I'm looking for. And that's it. We try to put out good content, share our video. And the consulting, I love helping people. And I'm looking for the next deal. It's all about finding a deal, baby. Finding a deal.
We highly recommend the consulting. I've been saying this for a while. I think you're undercharging. So for anyone interested, what's the website?
BenMallah.com. Consult with Ben.
Link down below.
Yeah, we'll just link it down
also,
below in
of
the
course,
description.
all of Ben's stuff is linked down below in the description. Guys, thank you so much for listening to this podcast.
Thank you.
We would not be here without you. So endlessly grateful for you guys watching, especially if you made it to the end. Thank you.
Oh, and also for the members. There's a lot of content in here that we did not include in the main episode. So if you want to see it uncensored, by the way, join the membership. You're going to get extra content, early access, uncensored, and I personally respond to all the comments. I think that's pretty good. That's a good deal, too.
If you want to know the latest styles and haircuts, here you go right here.
Thank you guys for watching.
So again, that is the Ben Mallah interview with the Iced Coffee Hour. He goes on their show a lot, the Graham Stephan podcast. But this is really what I'm talking about. You know, when we're talking about real estate, you have to think about what people are really doing, what is working, right? And commercial real estate investing is one of those ways, right? Ben Mallah talked about a lot of mainly, you know, not just commercial real estate investment and triple net leases and buying a Tesla, you know, factory or whatever, and buying these kind of properties. But he also talked about buying a multifamily, right? A 3-plex, a 4-plex, or a 5-plex. That's where you begin, right? He talked about how you need to have a real relationship with your bankers and your brokerages, right? Because that's where you get into the game. Okay, so some people might say, well, real estate's too expensive, I'm not even trying it. And then others are going to say, well, I want to figure out how to do it. I want to figure out what needs to be done. I want to figure out how much money do I need? What does my credit score need to be? You know, how long do I need to be at this job or whatever it is? What is my income, my debt to income ratio? You know, what's the credit score? All of it. And again, how can I get into triple net properties? Where can I find an auction to find commercial triple net properties? Where can I find that real estate agent, me, you call me, Brendan Ecker, for example, who's going to find me that kind of deal? Whether it's for commercial investing, whether it's for single-family residential, whether it's for an industrial factory, whether it is for, you know, a multifamily property. Again, whether it's for just, you know, selling your own property, of course. I work with all those people. But you also have to find out, how am I going to get approved? All right, how do I get approved? Where do I find that best mortgage loan officer or that lender who's going to be able to approve me? Okay, I got approved. What am I going to do in these next 45 days to find that deal? Okay, how am I going to negotiate the price? How should I go about making sure my real estate agent does it the right way? How do I find a good real estate agent? Well, in my opinion, you find one by, well, really watching this show, because you're going to be getting to know me. Everything about what I do on my show is giving you trust, right? I'm here to give you trust. I'm here to develop some kind of relationship with you through this digital kind of interface where you can, you know, build trust and rapport with me. You see what I kind of watch. You get education out of it. You get the news, you get the market info, and we're looking at properties together every single day. I try to do that on this show. That's what we're going to be doing, continuing on. And again, you also, again, more than anything, you get to know me. And again, I'm going to be teaching you what you need to know about Michigan real estate specifically, but we're also going to be covering the whole U.S. market, right? Ben Mallah is a Florida real estate investor. Okay, Graham Stephan is a California kid, and he's like a California real estate guy and a little bit of a Florida real estate guy. So I'm always talking about everything that kind of, you know, morphs into one thing when it comes to real estate. So again, if you want to work with me, visit BrendanEckerRealty.com with eXp Realty, BrendanEcker, Realty.com, and that'll be my website. Again, the website's in the description below. And again, we'll put the link to Ben Mallah's website as well here. But again, if you want to work with me, you can book a private consultation right on the homepage, or you can just fill out the lead form right here, and I will get your information here. Okay, 30-minute meeting, and you could book a Calendly meeting with me, and we'll talk. We'll have a conversation. We'll figure out what your financial situation is. Where are you at in the real estate process, right? Again, I'm verified for luxury real estate by the Residential Real Estate Council. You can find my profile on Zillow, Realtor.com. That's where we'll list a lot of your properties if you do work with me as a seller. And then I'm backed by Real Comp as well, which is our form of funding for realtors, for certified realtors and licensed realtors. So again, work with me. And hey, if you want to get sponsored as a real estate agent, if you just passed your real estate exam, then go to BrendanEckerRealty.com, fill this form out, and we will be able to get you sponsored. I'll hook you up with my broker, and my broker will be able to get you started with eXp Realty, 80-20 splits, right, on commissions. Pretty good deal. If you're working with eXp, that's why I love it. You get 80% of the commission, and I think it's a $16,000 cap that you have to reach. And if you work for Best Life & Co., it's only like a $4,000 cap, so it's pretty awesome. So this is where you want to work. Again, launch your real estate career with the right sponsoring partner, training, and a clear plan to grow. Again, one of the things Ben Mallah will always say, the real estate investor we just listened to, is to get a real estate license. Get a real estate license. You need to make money, get a real estate license. It's not hard to do. 40-hour course. The test isn't that hard. You get there's plenty of different practice quizzes on the internet that you can find. But fill out this form, and we'll be able to get you sponsored as a realtor. And then lastly, if you want to another way to contact me is you just go to the contact section on the website, BrendanEckerRealty.com, or you can just DM home, and we'll talk from there in the comment section or whatever. But go to the website, Brendan Ecker Realty, and you can contact me here. Just fill out the form. Again, we have 2 locations where I'm currently working, or 3 locations where I'm currently working at. We have Metamora, we have Romeo, and then we have Royal Oak. And again, I work with Best Life & Co. So we have a whole team that takes care of everything to make sure that you're getting the best possible results on your deal. So you're getting a better experience than most people who are going to be working with any other realtor who's just kind of self-funded, right? And so I'm looking forward to working with you. And with that being said, that's all for today's episode. And again, if you are looking to grow your own business, be sure to work with goldsharkmedia.com. This is a software that I built just for business owners. It's available for roofers, HVAC, med spas, legal services, B2B agencies, home services, realtors like myself, e-commerce, and it has all the features. Again, speed to lead, lead flow directly into your pipeline, AI summaries, Kanban pipeline, prospecting workspaces. Again, you can find those leads right off of Google Maps. That's what this kind of does. Follow-up tasks, review capture. This basically automates your Google reviews for you. ROI reporting, missed lead alerts. Again, it's a whole CRM, but run your business from one place. We have nothing but 5 stars on our website. So again, if you're looking to do that, definitely you can contact me for that as well. So again, be sure to work with me, Brendan Ecker Realty. And with that being said, I have pretty much nothing else. Be sure to stay prudent, stay powerful, and stay wealthy. Be sure to like, share, comment, and subscribe. And if you want to work with me again, just contact me. Reach out to me, Facebook, YouTube, Twitch, Kick. We're live on Rumble, and all these other platforms. You can pretty much find me anywhere. So shoot me a DM, and we'll talk about your real estate goals in Michigan and how I can get you set up. So again, we'll be back tomorrow, and we'll be talking more about the markets. We'll be covering more of Lapeer County real estate, and we're going to really focus on what are the biggest values of the newest market today, and we'll react to some other big videos that I've been seeing that I think you ought to see when it comes to real estate education and learning how to invest in this the right way. So like, share, comment.